We are here at the PDAC, arguably the world's largest mining conference. Over 20,000 people come to Toronto every year to understand where we are at in the metals and mining space. Joining me now is Amir Adnani. He is the chairman of GoldMining and he is the CEO of UEC. We will be speaking both gold and uranium. Amir, welcome back.
Thank you for having me back. I think this is the biggest mining conference in the world. And more importantly, why Toronto in March? It's too cold out there. I mean,
something I've been asking myself for the longest time, especially since we were just at the BMO conference in wonderful, hot, sunny Florida.
Much more civilized.
Amir, I was excited to have you on. You're always such a great interview and give us a better understanding of where we are at in the gold space. But first, let's start with your company, GoldMining. Your stock is up over 20% year to date. And you have new news that just came out from your project in Yellowknife. Give us the latest here.
It's an exciting news because it captures everything that GoldMining has been about as a company during this prolonged bear market in the gold sector, where we've been making acquisitions of resource stage projects that were drilled 5 or 6 years ago by other companies. And the Yellowknife Gold Project, the resource that we've put out today, was on the back of over 200,000 meters of drilling. Daniela, and when you look at the resource, it's over 1 million ounces in the measured and indicated category, about 2.33 gram per ton. It's another over 700,000 ounces in the inferred category, about 2.47 grams per ton. And what it does to our global aggregated resource is that it increases it to 10.5 million ounces across all of our projects in M&I. That's a 13% increase, and about 12.4 million ounces as an aggregate in the inferred category across all assets. That's about an 11% increase. So it's a meaningful increase to resources across all categories. And it speaks to the fact that we believe in this environment, it's more accretive to acquire resources by acquisition for cents on the dollar, as opposed to the exploration that involves risk and time and the fact that it's a high risk, high reward.
So you're obviously in favor of the mergers we've been seeing in the space.
We're not only in favor of it, we have in a way been one of the only juniors. I think we're probably the only junior that since 2012 has done as many acquisitions as we have. And part of the thesis has been you have a difficult period in the market. Why do we need to have 6 different sets of G&A and board fees and 6 different booths here at the PDAC? If times are tough and you got to be saving money, let's bring it all under one umbrella, get rid of all that extra costs. And a junior company can say that, and it actually makes sense. And I think the arguments you're hearing with the majors make is the same thing. It's cost cutting. It's driving greater shareholder return and value by reducing redundant cost and general and administrative expenses. So in a way, I feel like, it's good to see it, but it's different. If I go around as a smaller company consolidating assets, we won't be front page news. But when Barrick and Newmont and the big boys start to do this, it sends a really positive message. And I think it focuses investors that say, this is a sector that's talking about how to become more efficient. This is a sector that's talking about how to reduce redundant overhead. I'm interested in this sector. I should take a look at it. And it arguably is good for the entire gold industry. And that's why I think they say that, when the big companies in any sector start to roll up their sleeves and start to do big deals, it's a great indicator.
So Amir, this news today brings you one step closer to your goal. What's going to be the focus now for the remainder of 2019?
It's an excellent question, and it's somewhat driven by the gold price, because we have now, since 2012, have assembled a very large portfolio, a very diversified portfolio, where gold mining is now in 5 different countries. We're in Brazil, Colombia, Peru, Canada, and the US. We have resource stage projects, some with historic economic studies that were completed. If we end up with that move over $1,400 gold, our focus would be on advancing and de-risking this portfolio. If gold continues to hang around where it is right now, if sentiment for gold continues to be weak, we will be a buyer of additional assets where we feel there could be an accretive acquisition with no fatal flaws, good technical profile, everything that we've done up until now, we would do more of if depending on what the signal in the market
So
was.
1400 is really the key for you, getting over that mark.
It's just that's the mark we haven't been at for 6.5, 7 years in our sector, right? It's a mark that obviously could have technical implications, but also it's a mark that, from a standpoint of project development, makes many of the projects that are maybe borderline economic or just need that extra sort of move in the gold price to become interesting and economic. And also, it's the price that makes most intermediate and gold producers most likely start to trade at a premium to NAV. And once they start trading at a premium to NAV, their focus to invest in growth pipeline and exploration and development becomes much more positive.
So where do you feel we are at in the cycle? How far away are we from having those gold bull runs like we saw in 2015, 2011?
It feels like it's very much driven by maybe what happens in the next few months once this China-U.S. trade is out of the way, right? Because when you watch CNBC or listen to CNBC, there's a lot of hope being placed on that incremental upside in the broader market being driven by a favorable China-U.S. trade deal. I think a lot of that is priced in right now, right? So where do you go after a positive trade has been reached? Where does the market go from
But don't you feel that gold would win in either scenario, whether we have a trade deal or not?
I think gold is already winning. And I think gold is demonstrated since you and I last spoke and we had our interview. I think when we last spoke, gold was at maybe 1250 and it got over 1300 pretty quickly. Maybe it's pulled back and consolidating a bit here, but gold has been winning in 2018. It was very solid relative to how strong the US dollar was. Gold did reasonably well. 2019 has been off to a very interesting start. But let's not forget, we're probably 12 months away from the US kicking back into the next election cycle. And so there's only so much more that can happen here in terms of certainty around how strong the US economy has been. Starting a year from now, we're going to be back into election mode, campaigning and all of that, right? And that was, again, you look back to 2016, that was an election year, the last time we had a very robust gold market environment.